Well, it's been something of a mixed week here in Europe. After a lower start, all eyes here were on the Bank of England. The bank, as expected, kept rates unchanged, but did surprise the market with a hefty increase in their QE programme. Now, this very much put the cat amongst the pigeons for analysts and economists, debating what this action really says about the state of the economy here. In company news, Rio Tinto has been in the headlines for much of the week. Its stock took something of a beating early on, but it did see a rebound later on. Now, Rio Tinto's interim results are out next week, so it'll be interesting to see just how that fares. On the earnings front, we had some disappointing results from European banking majors Natixis and Danske, but it's not all bad news. European shares rallied towards the end of the week after lead economies Germany and France surprised us by returning to growth in the second quarter. Exiting recession, well, that's still up for debate, but definitely an encouraging sign for others in the Eurozone and certainly helping investor confidence. Well, it's a much brighter day today here in Europe. Shares are trading higher after yesterday's dip. Investors feeling decidedly chirpier after that cheery confidence data out of Germany. If we take a quick check of the numbers, the FTSE Euro First right now is up around 0.8%. Banks are the lead gainers so far this session. HSBC definitely the one to watch. It's up about 2.5% after Goldman Sachs said its troubled US unit will stop being a major drag on earnings earlier than expected. Now, Goldman also upgraded it from neutral to buy. Energy also doing nicely today, benefiting from that stronger crude pricing. If we take a quick look at where crude is sitting right now, it's just up under $68 a barrel, getting some support, of course, from the growth of Hurricane Bill. Miners are back out of the doldrums too here in Europe. Rio Tinto leading the way there after it agreed to sell its Alcan packaging unit for about $2 billion to Australia's Amcor. Now, that's certainly lending a helping hand to its debt burden. Now, that German data showed a much bigger than expected improvement in German investor sentiment, and that's pushed the euro and sterling up against the dollar in the currency markets. Sterling's having a much better day today too after UK inflation unexpectedly held steady in July. Later, investors will be watching out for US housing data for July at 12:30 GMT.
首先呢，让我们回顾一下，就是上周这个欧洲跟美国股市的表现。本来呢，这个美国跟欧洲股市连续上涨5周，情况呢是相当好。可是到了星期五，这个美国公布的最新的零售数据呢就不太理想，导致这个市场下滑。本来呢，就是投资人是预计7月份的零售数据是要上涨1%的，结果呢，它是下滑了0.1%，让市场有点失望。同时呢，也重新看这个最基本的问题，就是美国面对这个2战以来最严峻的经济挑战，消费者的信心到底能不能恢复？ 那今天来说呢，这个欧洲方面的股市呢是情况相对理想的，一改就是昨天下滑的趋势。情况呢主要是因为这个德国的一个调研报告 ZEW， 他访问了300个投资人，结果呢情况是理想，这主要可能是得益于上周。 德国跟法国宣布第2季度的 GDP 是上涨了0.3%，这领先美国跟英国首先呢走出这个经济的困局。那受到这个GDP 数据理想 的气氛影响下呢，这个今天这个欧洲方面的指数呢，暂时是上涨了0.6%，主要呢是得益于这个银行股份，比如说汇丰啊、渣打啊这类的银行股份所带动。
Well, European asset markets greeted the end of last week with relief after a turbulent 5 days that saw investor appetite whipsawed by a mixed bag of data and Q2 profit reports from major corporations. France and Germany might have escaped from the clutches of recession in the second quarter. They did report positive Q2 GDP data. That officially ends the deepest recession for both nations since World War II. But it wasn't enough to turn around the fragile mood. Government bonds enjoyed one of their strongest rallies of the year as investors hauled risk off the table and they opted for safety instead. That's been despite a slew of fresh supply that should have depressed prices. German bonds rallied sharply to close the week 15 basis points lower, while 10-year treasuries saw the most aggressive one-week drop in yield so far this year. Now, that reversal of risk appetite did give the dollar some much-needed support, held the index at around 79, but that's still close to its low point for the year. And that all meant that stock markets were just unable to break through the strong technical resistances that benchmark indexes have been bouncing up against around the world. Britain's FTSE 100 and the wider FTSE Eurofirst 300 index of European stocks had their worst run in 5 weeks and ended the trading week down for the first time since July 12th. Well, risk appetite has rebounded on Tuesday, and that's after a shaky start to the trading week on Monday. The favoured cyclical recovery plays are back in focus for investors tracking the FTSE 100. Mining and oil stocks are the main drivers behind a rally of around 1% by midday today. Financials have also performed strongly in the morning session. Playing the recovery traders lifted the prices of raw commodities, and that's put downward pressure on the safe haven trades of government bonds, particularly in the Eurozone, where bond futures fell a full point in the wake of the ZEW Investor Confidence Index. That came in at its highest level in more than 3 years. Gilt futures are also falling after UK inflation data came in steady for July at 1.8%, that against expectations for a decline to 1.5%. But while that knocked bonds lower, it did support the pound, and that's ticked higher against both the US dollar and the Japanese yen. Investors, of course, are now turning their attention to US economic data, with housing starts a key barometer for traders this afternoon.
That's great if you're happy with